Hello and welcome to BQ Prime. I'm Hiral Tadia. A couple of stocks that are buzzing in trade today. We are going to discuss contours in terms of what we could do with the Justile and HDFC Bank, Aster DM, and many more stocks in today's session. We have Sharmila Joshi from sharmilajoshi.com joining in. Sharmila, welcome to the show and a pleasure to speak to you as always.
Yeah, hi.
Sharmila, let's start off with Just Dial. Overall, if you see in terms of the numbers for Just Dial, a good growth number has come in terms of profitability. What's your view on the counter? Because if you see in terms of the stock price, today we are up almost 10%. And in the last 6 months, it's been a very volatile ride for the counter with an up move of around 10 to 13%.
Yes, precisely. And I think you will probably remember a time when people pretty much wrote off the stock because it looked like, it was a business that was sort of going out of fashion. And then I think from there, the stock had corrected significantly because, a lot of the services that they were offering, which were just like a which was just basically based on a phone call, those were getting outdated. So they had to sort of reinvent themselves and they had to get into this mode where they had an app and offer much more than just a phone service. So I think it's been, as you said, I'm not talking of just the last 6 months, but I think possibly the last 2 or 3 years, if you were to look at it, it's been a very volatile ride for them. So therefore, it's very heartening for me to see the kind of numbers that they're doing, because it definitely means that all the thinking that went behind sort of repositioning themselves has now begun to sort of show up in the numbers. That said, I think, if you look at it in terms of valuations as well as results, I wouldn't really say that you need to go and buy the stock right now. But in terms of just the kind of numbers that they've given and their story over the last 3 or 4 years, I would say that, this is a stock that you could continue to watch and maybe a couple of quarters down the line think of investing. But for now, I think just take the good news on board that good things are finally happening for them.
Right. So that's with regards to a Just Dial. Moving on, a Dmart, on the contrary, has plunged in trade. And this is an interesting counter because clearly it's actually delivered multi-bagger returns to investors as well since listing in 2017. However, if you see in the last 1 year, the stock has clearly underperformed with a double-digit loss in terms of the stock price. Q3 earnings, it's missed estimates as well. Revenue growth of around 25% is what we've seen. Profitability has grown by around 7%, and there has been weak discretionary demand that has pulled down the same-store sales growth. And the gross margins have gone down as well. What would you make of a Dmart overall, and what would your call be?
So here, I think possibly, when you said things went wrong for Just Dial, you have sort of an absolutely opposite story play out for Dmart. Because they had a lot of things going for them. One thing it seemed was that they were understanding where the sort of gaps in the market were in terms of the business that they were in, as well as the promoter. I think the promoter also played a big role because very well respected and very absolutely looked up to figure in the markets, and which is why I think the management got a big thumbs up. And if you remember, just a couple of years back, the kind of brokerage reports that we were getting on Dmart, as well as the kind of valuation that market was ready to give it, then I think, in face of that, this becomes a very disappointing number, very honestly. All the parameters, I think you enlisted them, whether it is the margins, whether it's sales store growth, everything. I think they just, something seems to have gone completely awry for them in this last quarter. So I think also what I would like to add to that is that perhaps that, you must not forget that many big names are also getting into either related businesses or sort of similar businesses. So you already have, for instance, the Tatas with their foray into the business. You have an Adani Wilmar. You have Reliance announcing. So we don't know what the future could hold for a company like this. So I think having said all that, we shouldn't get carried away by the pessimism, because this is one quarter after all. And in that sense, perhaps in the markets that they are in, this could have been a slightly difficult quarter, because, the commentary again one hears from a lot of FMCG players is that there is definitely more pain in, outside metro sort of a scenario. And Dmart does have a strong presence in some of the smaller cities. So let's wait and give it but another quarter in terms of for those who are holding the stock. But definitely, I think don't buy new, and I think I definitely don't agree with again the kind of valuations that one hears for the stock. So in that sense, again, I would put this stock on the radar and keep it on my watch list and see how they perform going ahead.
Right, so that's going to be coming in with regards to a DMart. Moving on, another stock which is in focus, Sharmila, is the HDFC Bank. Clearly, there is some bullish momentum. Analysts are bullish on the counter as well post Q3 earnings. What would your view be, and what do you make of the numbers so far?
So I think, first of all, a very good set of numbers. Because I think there's no getting away from the fact that given the size of the bank, to deliver this kind of a number quarter on quarter for the longest time, I mean, they're almost like boringly good, if one can put it like that. Really, I think there has been maybe one odd quarter somewhere where they may have slipped up. Otherwise, it's just been like a 19-20% growth for I don't remember how many quarters. Then again, I think, another positive for them is that, when there is a management change, there is always a bit of concern because, Mr. Aditya Puri pretty much led from the front, and people did respond to the kind of aggressive growth plans that he had. So I think in that sense also, this is a good set of numbers because with the new management also, it looks like the engine is firing. And thirdly, and I think which is probably the most important for me from an investor perspective or from a recommendation perspective is that there are some stocks which I think should be part of your portfolio, and I think HDFC Bank is one of those. Also, you have a big merger story playing out. HDFC Bank, HDFC, that will place HDFC Bank in a completely different stratosphere. It will be counted among the world's largest banks. So that's a whole story that's waiting to play out. How they do that, how they make the transition, how they leverage the advantages that it gets. So I think you should be in this stock for the long term and for the long ride. So yes, I think a definite thumbs up for the results. And for me, as I said, HDFC Bank is clearly a portfolio stock.
Right. So that's what the HDFC Bank. Another newbie that's come in, which is performing well today, is the Sula Vineyards on the business update. In fact, overall, if you see, it debuted pretty much flat in terms of listing. Then we did see a dip that did come in terms of the stock price. And after the business update, we've seen some good movement in today's session where they've reported a strong 13% volume growth with realizations. And this is with regards to the December quarter. This is the highest ever quarterly gross billing that they have done from its own brands and from its wine tourism business as well. What would your view be to an investor on a Sula?
So first of all, I think, what should I say? I'm a bigger fan of their product than I'm of the stock. Because, I honestly think that, again, if you backtrack a couple of years back and the story for the wine was that you would find that it would get a larger sort of a presence, or you would have more converts to wine drinking, given that the younger population we had India has a younger demographic, etc. But that story hasn't really played out. You haven't really seen that result in growth in terms of the number of consumers that wine has had. If you were to take the last 7-8 sort of period into account. That said, I think once again, as the management themselves said, that they are coming out of a COVID sort of a scenario, and this is the highest ever sales number for them. So again, I think you can watch it. I had a sort of a neutral stance on it when the IPO came. I don't think that I don't really recall how they did on listing, etc., and whether people made listing gains. But I think if people buy this, they have to be in it for the long haul. Again, I think this is sort of a only wine sort of a company. If the other listed alcohol companies have a mixture of brands that they offer, this is a pure wine play. So you have to look at it from that point of view also. So I think all things said, I'm sort of neutral on the stock. As I said, I'm a bigger fan of the product than I'm of the stock. So I think I'll just leave it at that.
Absolutely, a big name coming in the wine industry, representing India as well. Moving on, Aster DM Healthcare. Now, the stock has not really done much in the last 6 months, remained pretty much flat, and up move of around 1 to 2% is what we've seen. And if you see the performance in the last 1 year, though, a 17 to 18% up move that it's seen. Now, one of the newsmakers today, reason being is that Malabar Institute of Medical Sciences, which is a material subsidiary of Aster DM Healthcare, has entered into an agreement to acquire 99.99% stake in Cantown Infra Developers. And the reason why they are doing this is because the Cantown Infra Developers land which they have is next to the boundary of Aster MIIMS, and they're looking to add more capacity and beds to expand the hospital to generate additional revenue. Now, overall, this acquisition is done for around 15.22 odd crores. What would you make of this from an expansion perspective, Sharmila?
So I think, the way you explained the news, because, when I just read the news, it didn't make sense to me. But, when you explain that the property that they're acquiring is next to an existing facility of theirs, and therefore it facilitates expansion, then I think it's a good fit. I think, again, when you talk of Aster DM, you need to keep in mind that their unique model where, where they have India and sort of GCC business. And I think, again, the India business has been a little bit sluggish over these last couple of quarters. So I think this can only contribute, this kind of an expansion can only mean good things for them going ahead. So once again, I think given the results and given their valuation, my stance on it is neutral. I'm not recommending a buy on the stock at this point in time. But in terms of a news development, I think certainly this seems like a good way forward. Because if you are expanding an existing facility, then it also means that you see scope of greater demand from there. And it's a good fit, a net. So let's wait and see how this pans out going ahead for them. But as of now, I'm neutral on this stock.
Absolutely. So that's the view coming in with regards to Aster DM. Sharmila, any disclosures that you would want to give?
Yes, I think it's fair to assume that I could be having a holding in the stocks that I've discussed, or I could have recommended them to clients.
Right. Thank you so much for joining us on the show and giving us and the viewers the views with regards to the newsmakers of today. Thank you, viewers, for joining in as well.